So a few of you might be looking at the screen going, okay, digitization, what is that? You might even be looking at the screen going, CME Group, what is that? I will explain, but why don't we start off with a couple things. Welcome. I'm so happy to be here in Atlanta. I spend a lot of my time traveling the world, speaking in London, New York, San Francisco, occasionally Chicago as well. But to be in Atlanta, to see that there's this kind of interest, to see the levels of activity that actually are at play in Atlanta is amazing. So I hope that energy and that interest and the building continues. I think we need this all over the country and actually all over the world, because this technology transcends all borders. And that's what's pretty exciting about it. So welcome, glad everyone's here, and let's kick off a very interesting day to be had. So what am I going to talk about? I'm going to talk a little bit about 2017 really is about more building and more collaboration within financial services. And I'm really just going to focus on financial services because that's our area of expertise. And then I'm going to talk a little bit about so what. And I hope there are some skeptics in the room, because even though a lot of us have drunk the Kool-Aid and we live, breathe, sleep, eat blockchain, there are people who are out there saying, so what? This technology, what really will it do? Is it just hype? So I'm going to give you a little bit of perspective from a CME Group point of view. And then if we have time, I'm going to talk a little bit about a specific use case, the metals markets and blockchains, and why you should care. There's some very interesting things going on. So let's start off with financial institutions. Whether you are a skeptic or not, there's investment going on. And there's a lot of investment going on with a lot of different brands. Whether it's doing their own corporate venture investing, whether it is about running proof of concepts or projects, collaborations, there is a lot going on in the space. And you see it in the media now pretty much. If you look at any financial media, you probably see something happening in the space on a daily basis. Use cases. People are always interested in what kind of use cases are actually going to apply here. Well, it's pretty broad for financial services, and I've circled the ones that really are relevant to financial services, either directly or in an ancillary way. And what do I mean by that? Well, there's some ones that are pretty obvious, right? People talk about capital markets, derivatives, clearing, settlement, post-trade related use cases, pretty much across all the asset classes. You name it, you can probably find efficiencies. But what is not always readily obvious, but actually is now coming up the learning curve and also the talking curve, as I like to call it, is the provenance of commodities. So physical commodities trade all over the world. Physical commodities are physical. So how do you digitize it? Or what does a distributed ledger do for tracking of physical commodities? Well, that discussion is being had. Whether it is oil and gas, whether it's agriculture space, or whether it's metals, these discussions are around how do we improve the way we track, prevent fraud, verify, and record the movement of physical commodities. And I think that's pretty exciting. And it has impact on finance, it has impact on credit, and it has an impact on a number of different things. Okay, so why will digitization change financial services? Well, right now, many financial institutions are under pressure. Banks in particular, whether it's regulatory pressures or cost pressures, just from running their businesses day to day, there's pressure. And there's a huge amount of desire to cut costs. And when you look at the way banks work, especially big banks and financial institutions, there's plenty of room once you start looking to find efficiencies. And this is just a statistic that was out by Santander a couple years ago, but it's still relevant today, which is what are the potential cost savings of the post-trade space alone? So that's like confirmations, that's settlement, that's record keeping, that's compliance. If you look at all of that across the board, they've calculated that something of 15 million or upwards of $15 billion could be saved by the industry. Those are big numbers. That's why people are really motivated, because when you look at those kind of cost savings and efficiencies, it's very meaningful to your bottom line if you are a business. I want to thank Autonomous for this research. The other, if you like numbers, I like to throw some numbers out there. Look at estimates of 54 billion of annual clearing and settlement costs globally being saved. Look at $163 billion worth of bank sales and trading costs globally being saved. Now, you could argue, well, those numbers are kind of lofty. Who knows if those numbers are, going to be exact. But if those numbers even come close to potential cost savings, it's staggering. So for those who are, skeptical of why financial services are looking at this space, it's because it's not just Santander, it's not just Autonomous Group. Many, McKinsey, you name it, consulting firms have run these analyses about what the potential cost savings of what blockchain can do, and the numbers are big. So what does that mean? Well, we're going to see an evolution, and I think we're seeing that evolution as we speak. And that evolution is from physical infrastructure, banks the way they are today, just to give you an example of bank, to things that go on your phone, right? It's mobile phone usage not only to manage your checking account, but it's actually the potential to move frictionlessly around in a virtual world where your wealth could be held on your smartphone one day. But in order to get from the physical to the digital on your smartphone, there's a huge amount of evolution that needs to occur. And so I'm going to talk from a specific blockchain DLT perspective. There's actually many other technologies at play here, but I want to talk about some trends that we're seeing, and hopefully, that will stir some conversation later during the day to be had. So things that we've noticed in the evolution of blockchain DLT, 5 trends. 1, government agencies, regulators, central banks have increased interest in this space. And in my experience, I find that a bit perplexing because it's kind of backbone technology. So why are government agencies, regulators, and central banks interested in this? It's about sharing of information across a distributed network. Oh, wait, there's a token element to it. Maybe that's why they're interested from a central bank standpoint. All of a sudden, they're looking at digitizing their currencies in a digital world. That's interesting. Okay, so central banks are looking at that. Bank of England, FCA, the Monetary Authority of Singapore have all set up fintech sandboxes. Why is that? I think CFTC last week there was an article about potentially them opening up a sandbox as well. Well, why is that? Why would they want to promote this technology? Well, I think what really is happening here is there's an education process going on, first of all. Secondarily, I think the global impact of blockchain and DLT across the spectrum, including governments and money, is now becoming apparent. And that potential is where the excitement comes, and I think that's where the collaborative nature of what is happening in this space, which I find very unusual because if you think about previous technologies, you've never had the kind of interest, the kind of media attention and focus that you do see in a technology that, again, I will repeat, it's a network, it's a backbone technology, but yet why is there so much interest? Why is there so much hype around this? And it's not necessarily a bad thing. Actually, it's probably a good thing that we've got government interested in the sense that there needs to be collaboration across jurisdictions, because if you don't have that, if every state comes up with their own laws, if every country comes up with their own rules, we're going to have jurisdictional arbitrage, which is actually a problem in financial markets right now, is we've got lots of issues just because of jurisdictional arbitrage. So hopefully that's a trend that we'll see continuing where industry, fintech, and governments will work together. Number 2, network formation of industry consortiums. I think, if you read the press, there's lots of consortiums out there. I've just named a couple, the Linux Foundation HyperLedger project. There's another group called the Post-Trade Distributed Ledger Group out of London, which is just industry-focused financial services. There's R3, there's Depactum. There's a number of others that are forming and emerging, and there seems to be a new one, at every turn. That collaboration is actually important because this technology is not one of the ones where you go and build a proprietary system and then you can say to people, yes, come and use it and I will sell it to you. It doesn't work that way. It's open source, it's decentralized. It is about collaboration. You don't have collaboration, nobody comes to your party, then you're going to be pretty lonely. It's basically the way it works. Number 3, so it's important. Number 3, fintech, M&A, and specialization. I think this is the year we start seeing small amounts of M&A consolidation. I think there's still going to be tons of new startups that are created, but right now there are hundreds, if not thousands around the world that are working on different elements of blockchain and fintech. And I think where you're going to start seeing some interesting movement is companies in specialized areas. So for example, trade finance, supply chain, smart contracts, realizing actually, you know what, it's better for us to team up, and from being a 2-man shop to a 4-person shop, becoming a 6-person shop and actually growing. And I think that's going to start happening, and we're beginning to see that. There's also some very quiet corporate level acquisitions happening. So, you know, maybe it's not announced, not a big M&A deal, but I think corporates are picking up some small companies, or they're picking up talent. Maybe they're picking up the IP and the software. That's all very small. These are not huge M&A deals, but these are happening around the edges that, you know, I think will just continue to grow in the next couple of years. Technology convergence. I kind of alluded to this earlier. Artificial intelligence, IoT, big data, cloud, machine learning, I mean, you name it. There's a whole wall of things happening in technology, and it is overwhelming at times. And we're beginning to see on the trading side, for example, some of these, you know, applications coming in which hit up against blockchain or may not apply to blockchain at all, but they're all going to have an impact on our business. And for us to look at these in a siloed way, I think would be a missed opportunity, because actually one set of technologies has impact on another set of technologies, has an impact on the business. So we need to be cognizant of the fact that there's an entire wave of disruption happening. It's not just about blockchain DLT. You know, don't get me wrong, I spend all my days on blockchain DLT, but on the fringes, I've also got peers who are experts in other areas, and we make sure that we collaborate, because there are things coming faster than we think. And it will take time for it to percolate to mainstream, but there are things happening in AI and IoT that I find, you know, much faster, at a rate much faster than I would have anticipated a year ago. So worth keeping in mind. And then finally, transparency and the rise of non-financial use cases for blockchains. That's really exciting. I'm going to talk about financial services here, but frankly, the fact that people are demanding, and different areas of industry are demanding more transparency, demanding that actually we have the ability to be able to track things, whether it's food, whether something that's labeled organic is really organic, or whether something is valid or says what it is. I think those are very important, powerful things that will have impact on healthcare, food, you know, automotive industry, supply chain across the board will be impacted, consumer products. And those are all really interesting things. And I just named a few here. Walmart's tracking, you know, pork in China. BHP Billiton's tracking mineral samples. IBM's announced that they were coming up with a blockchain to reconcile supply orders and billing invoices. You know, there's a whole bunch of things that have been announced, and I think you're only going to see more. So I'm just going to take one of the trends that I mentioned and just talk about, you know, a particular institution, the Linux Foundation HyperLedger. I'm just going to take a moment out because I think it's important for us to really think about why should you care about these consortiums and why should there be common standards. I think I mentioned already that this technology does not have borders. It transcends borders, and therefore collaboration is key. And the better collaboration we have and common standards we have, the ability to then be able to share and collaborate on a common, I like to call a virtual, you know, highway, will make the opportunities to build on top a lot better. Now, HyperLedger's goals in particular are pretty simple. It's about building community, it's about education. Blockchain is not mainstream yet. People, I mean, I ask people all the time, you know, and anyone who was willing to listen to me, you know, have you heard of Bitcoin? Have you heard of blockchain? Have you heard of Ethereum? And you know what? The average person, the answer is no. And so there's a huge education process that still needs to happen. And so HyperLedger is trying to do that. And it's also trying to build the fabric and the underlying infrastructure to be able to have all of us, any of us, build on top. And I think that's critical. And for full disclosure, CME sits on the governing board of HyperLedger, Linux Foundation. And actually, for anyone who is interested, my colleague Kariti Reddy is sitting on the governing board. He's probably going to kill me for saying this, but he's in the audience somewhere. So anyway, so what? Let's talk about CME Group's perspective and just give you a few bits of insight. For those of you not familiar, we're the largest derivatives marketplace in the world. We are made up of actually CME, NYMEX, COMEX, CBOT, the Kansas City Board of Trade, and CME Europe. We're actually more than just an exchange. We have many different businesses. People think that we're just a listed derivatives exchange. There are many businesses that we have today that didn't exist 5 years ago. For example, we also have a global trade repository service, which basically tracks and reports required swap trades. And that came into existence because of regulation. We clear OTC transactions in derivatives because, again, regulatory mandate came in and we built the infrastructure for that. We're NASDAQ listed, 42 billion market cap last I checked, about 2,700 people, mainly headquartered out of Chicago, but we've got people in New York, London, Singapore, and many other cities as well. So where did we start? Well, we started with farmers. We started creating futures contracts so that people could hedge their agricultural products. So it started with wheat, egg, butter, the roots, and also the head of our ags business is actually here, Tim Andreessen. If you'd like to talk to him about our ags business, he's in the audience somewhere, and he's probably going to kill me too. So those were our roots. And that started back in the 1800s, and we then moved to Globex, which is our matching engine, and that's our bread and butter. That is literally our matching engine that allows for people to match trades and have price transparency on all of our markets. And I think some of you might remember the guys in colorful jackets in the pits. Well, we've gone from that, by the way, to this. And this is what most of the screens look like. To me, I think you need like 20/20 vision to be able to see all those line items. But this is what the world looks like today for us, because we've gone to screen trading. But guess what? Mobile trading is coming. And whether 24/7, 365, like the crypto world trading will happen, that remains to be seen. We're very close to it. We probably do close to 24/7. It's not quite. It's a bit shy of that. But this screen trading will go to mobile trading. And here's another statistic that I always like to show people, and a few of you familiar faces in the room have seen this many times. But I find this staggering. By 2020, more people are going to have mobile phones than running water or electricity. Staggering. I was in Uganda last year in July, in Kampala, the capital. Guess what? It's true. People have mobile phones and they live in shacks and have no running water, and yet most people seem to have a mobile phone. It is going to be a very interesting world in emerging markets, because with the advent of the smartphone, you will be able to do so much, and that includes having financial services access that you could never have before. The implications of that, I think, are staggering. So CME Group itself, I'm just going to quickly go through this. A lot of this will be available to you. I've said that I'll make these slides public if you want to have them. I do need to take a few things off, but I will have them available. But basically, we look at having a strategy around this. It's a living document. We're constantly updating. It is about pivoting and adjusting as we go, but we have a long-term vision of where we want to be and the opportunities that we want to look at. We do proof of concepts. We don't actually announce them. We just have taken the view that we will not publicly announce those things. We'll run experiments. What we do announce are actual production-ready things that will be launched into the market for either our customers to use or trade and access. So those things are important to us. So we look at DLT, especially because we have a very large clearinghouse and post-trade, but we also look at digital assets, like Bitcoin and Ether and a bunch of other cryptos that are out there as the advent of a new asset class. So let's be clear here. We look at things very differently than some of the other financial institutions. We think actually that there is a new asset class coming down the pipe, and we're just at the beginning of it. One category are cryptos like Bitcoin and Ether, and some of the other tokens that are out there, like Litecoin. But the other ones that are really going to be critical are the tokenization of physical assets. So the tokenization of physical gold bars, the tokenization of, crude oil, bushels of wheat. It's all going to come through at some point, and that's going to make trading very interesting. And then finally, I'm going to just add talk about a couple more slides, and then I'm going to let this go, but I'm going to close. But we have a venture arm, CME Ventures. It's an independent venture arm, and it's invested in a number of different categories in the space. They have a much wider mandate than the digitization team. The mandate for CME Ventures, they invest in AI, hardware, software, satellite imaging, you name it, quantum computing. But in the DLT space, they have actually invested in Ripple, the one in green, basically, Digital Currency Group, and Digital Asset Holdings. This is just a snapshot of some of the investments we've seen in the space. I'm pretty sure it's outdated because every time I go to update this, yet another investment comes through that throws this off. So don't take it for the latest version. And just to give you a sense of what we've actually done, CME Group has launched a Bitcoin reference rate and a real-time index. You can get that at cmegroup.com Bitcoin. We are here to provide price transparency and credibility when it makes sense. And for us, we've been researching the Bitcoin market for a number of years, and it is growing. I know there are some who are still skeptical about the crypto market, but again, we're willing to stand behind and add credibility to the markets that we think are nascent, but we're willing to help to grow and to develop a buoyant ecosystem, because if you don't have liquidity, and you don't have derivative products, and you don't have pricing products, and you don't have the instruments out there to trade, it's very difficult to create a vibrant ecosystem. So where we can help, we will. And then secondly, we announced back in November, we're launching mid this year a digital gold product. It's called Royal Mint Gold, RMGs, and it's in conjunction with the UK government. Just to give you a snapshot of Her Majesty's Treasury is 100% owner of the Royal Mint in the UK, but actually it operates like a PLC. So their mandate is to make money. And when they think about their coinage business going away, guess what? They're going digital, which is why we've partnered with them to launch a digital gold product called RMGs. So I'm going to leave you with one final thing, and it's not because I want to be a downer. Risks. Let's face it, we need to think about risks here. There's a lot of money coming into this. I think we should all support collaborations. We should all support the advent of a nascent or development of a nascent technology. But there's going to be risks that, every endeavor, faces. And the question will be is, can we as a collective here mitigate these risks and actually help and develop the technology as best we can? I think that's possible. There are some things that we can control, and there are other things that, are going to be difficult to control. But this is where discussions will happen today. And I hope, whether you're talking about insurance or banking or whatever, that you have those discussions that will help lead the path for development. And finally, I'm just going to leave you with these. You can take a look at this later. But basically, the metals market alone, opaque, bilateral, not transparent. There are things happening in 1 year that are going after this particular market. And if you think about just this silo, think about all the other markets out there. Things are happening at a rapid clip. And I'm just giving you one example of that. So have a great day. Have a lot of great discussions. Maybe hopefully some debate as well. It's always good to have counter arguments for things. And if you have any questions, you can always follow me on Twitter, or you can email me as well. Thank you.